The European Commission in Brussels has just approved a 25% duty on bourbon whiskey. This on top, of course, of tariffs imposed by China and Mexico as well. How much of an impact will this have on the industry?
You know, again, there's always the potential for some type of impact, but I don't think it will be a tremendous impact. The bourbon industry is about an $8.5 billion industry right now. Europe is a small portion of that, but growing. And the fact is, people love bourbon. And when you think about this, why do people put tariffs on? They usually do it to protect an industry, some type of a nascent industry or a struggling industry, something sensitive to defense perhaps, or they do it to raise money. And the EU is straight up doing this to raise money. They are taking bourbon, which is very popular, that's only produced in Kentucky. So the reality is 95% of the world's bourbon, and frankly, all the bourbon worth drinking, is made in Kentucky. So they're not protecting the European bourbon market. They're doing this as a pure money grab, and it's to take effect maybe as early as this week. Maybe in July. We'll see. The reality is this is all a bunch of play between nations. We have significant deficits with the EU, about $150 billion. You go back to 2009, we only had a $61 billion deficit with the European Union. So clearly, as their deficit with the U.S. has grown and grown, if they want to play this game with the United States, ultimately they're going to lose. So I don't see that this will have long-term implications on trade between the EU and the U.S. I really don't, but especially as it relates to bourbon, people in Europe still love bourbon. They're going to still buy it, and the European Union will just make money off it. That
seems to be the calculation by the president and his administration, that this is just part of broader negotiations. However, if it starts to claim real victims in some key U.S. industries, would it be time to rethink this strategy, especially if the actions are not just targeted against China, but also against allies?
Again, I think it is important to understand whether the victim is the right word or not. There will be repercussions, no question, and people will feel it. And the cost of goods, certain goods in particular, will go up in every country that is involved in this type of a trade dispute. There's no question about that. It has historically always been this way. So there will be implications of this. Whether or not states should immediately rush to weigh in, we'll take that step by step. Certain states that are more agricultural based are more susceptible to these types of things than is Kentucky. But there are certain industries, our automotive exports, certainly our aerospace exports, our pharmaceutical exports, our agricultural exports, our bourbon. We still have a number of things as well that we have to worry about. But I'm not too concerned about it at this point because I do believe you're right. There's a certain amount of posturing that's going on. It's part of the negotiation process.
You've talked about aerospace, car industry in Kentucky. For example, they're also getting hit by U.S. tariffs imposed on steel and aluminum that makes metals more expensive. There are industries that will get hurt. Does that mean that the state will weigh in and try to support some of those that will get hurt during this trade standoff?
My job as a governor, as you could imagine, is a delicate balance because on the one hand, we have people in Kentucky who produce raw materials, people like Century Aluminum that would benefit on the one hand from the 232 rulings that came out of Commerce recently. But then again, we have people that are peripheral producers, people that produce products out of steel and aluminum. And these are folks who are going to arguably be hurt with respect to the fact that their cost of raw material has at least initially risen and is likely to rise in the near term as well. So that means the cost of their goods goes up. If they don't have the ability to pass that on to the consumer, who loses? They do potentially, the consumer does potentially. So I have to balance all these things. I have people who both benefit and are hurt by this, and my job is to represent them to the best of my ability and to make sure that as a state, I'm advocating for us to thread this needle as thoughtfully as possible.
How much room is there for cooperation on the state level when the administration is taking such a hard line against trade with allies and with China?
There's a tremendous amount, and I applaud this president. President Trump and this administration have been more open to dialogue with states than any in our lifetimes, frankly. The amount of interaction that the federal government has with state governments, the number of conversations between the president and governors of both parties is unprecedented, and I encourage more of the same. So the president does speak with us, does listen to us, does allow himself to be informed by us, still does what he does with his administration administration, but with a lot of dialogue and feedback from us at the state level. I find it interesting, actually, that in his recent G7 summit, he made the proposal, kind of threw it out there, said, listen, why don't we take all tariffs off everywhere? I noticed nobody liked that idea. Why not? For all the people who love free trade across the board, I'm a free trade proponent, but it has to be fair trade. And if we took every tariff off everywhere, I would be a strong proponent of that.
How important is a NAFTA 2.0, and do you expect it to happen within the year?
I tell you, it's hard now. You look at what's happening, just the election cycle in Mexico that we're heading into right now at the national level. We've just come off of, provincial elections in Canada. When we have our elections coming up in November, this is taking people's eye off the ball politically. Is it still possible? It is. It's a shame that we've missed, I think, the boat to have done some things. What I've encouraged folks in the U.S. and Canada specifically is to not feel that we have to eat the entire apple in one bite. Let's take it a bite at a time. Let's focus on dairy, say, and agriculture and soft lumber. Let's start with things that are smaller scale and then take it up to other things as well. When we get into metals and things of this sort, let's take it a step at a time. We don't need to resolve this. Everyone agrees it needs to be modernized. It's antiquated in its approach, but the premise behind it was arguably good. Let's just modernize it and make sure that it works.
The China General Chamber of Commerce says that 60% of respondents to their survey of more than 700 companies here in the U.S. say that they plan to invest and increase, actually, their workforce in the next 2 years. Could those plans be derailed once the administration comes out with plans to curb investments by Chinese corporations?
I don't think so, and I'll tell you why. Capital goes where capital is welcome. And capital is welcome right now in the United States. It's very welcome in Kentucky. And I've made very clear in my conversations with Chinese companies, Japanese companies, Korean companies, a number of Asian companies specifically that I've met with in recent months, that we are open for their business. We have more than almost 9,000 employees in Kentucky who work for Chinese-owned companies even now. One of the larger, certainly per capita, of any state in America. And so this is something we're already doing, and I welcome more of it. There's a tremendous amount of capital that has been built up in China. It's looking for a place to get a good return on its investment. And where in the world is that return right now? Seemingly more obvious than anywhere else. North America, the United States. So that capital is still interested and will still come. I'm confident in that.